Simon with AvaTrade. Welcome to our weekly webinar, mapping out your week ahead. For new people, of course, the special welcoming goes out to you. And just to explain what to expect from this webinar, we're trying just to create a plan, simply put, create a plan for the week. And I usually always like to quote the traders when they say you plan your trade and then you trade your plan. Of course, it doesn't guarantee success, but definitely removes unnecessary chaos from your trading and creates a little bit of order. So that's what we're trying to do here, right? Few things about myself. My name is Simon Friedman. I'm a senior account manager at AvaTrade. My trading experience started in June of 2000. I started as a prop trader in New York City. I did it for about 11 years, and then I moved into as I like to call it, a less stressful environment, and I started to mentor and educate others. Trading is my passion. I hope it's yours as well. You have to love what you do, otherwise it's hard to succeed. The agenda of the webinar, we'll be talking about indices, stocks, commodities, and Forex. We'll have a little bit of crypto for dessert, and we'll mix some fundamentals with technicals. We'll take a look at the economic calendar, and for the technicals, we're going to take a look at the charts and go instrument by instrument. We'll also take a look at winners and losers for the week and put it all together. We'll try to make the whole picture, try to make the plan for the week. Risk warning, you can find the full statement at avatrade.com website. Of course, everything we do here is purely educational. We do not suggest any trades. And of course, we do not give any trading signals. Social media channels, please feel free to follow us on Telegram, X, and YouTube. As I usually say, YouTube is my favorite. It has a huge spectrum of information there. You have educational material, you have tutorials on platforms, you have webinars, including this one, that are recorded and posted on YouTube. So don't stress about missing a live webinar. You can always come back to YouTube and watch it at your convenient time. If you are watching this on YouTube, please feel free to click likes. Of course, only if you like it. Excuse me. Feel free to share it with people that might benefit from this. And if you have any comments, questions, please feel free to leave them as well. All right, so a few things. It's been a crazy week in a way. As you heard, there was some banking crisis that triggered sell-off in the market. So we'll take a look at the banks. One of the banks that created that issue, there was a report by Zion Bank, and there was a reaction. And actually, something that I liked, the CEO of JP Morgan, Jamie Dimon, suggested, I'm going to quote it here, suggested the losses tied to bankruptcies in the auto industry could be the first in a batch of credit problems for banks. And his quote here, when you see one cockroach, there are probably more, Dimon said earlier this week. So it was a panic. If you remember, many times, if not every week, I speak about the banks as a sign of the health of the economy. So when the banks start reacting to the downside, we could see a strong pull downs in the markets. So that's what happened this week on Thursday, and then Friday we had a pretty nice recovery there. We'll take a look at the chart. So a few slides here, some of them from MarketWatch, some from Barron's. So this one says, this is a bad sign for the stock market. Bull markets typically end when investors believe price can only go up. And it says it's a bad sign when retail investors so eagerly bought last week's stock market dip. Last Friday, you may recall the Dow Jones Industrial Average fell near 900 points. Rather than a rush for the exits, which retail investors often do when the market plunges, this time they enthusiastically bet on a quick rebound. According to the data, completed by my colleague Joseph Adinolfi last Friday, saw the biggest total buying by the retail crowd since January 27, 2021, the day when the original round of meme stocks mania reached apex as shares of GameStop Corp soared, right? So interesting. Everybody's partying here. I like the picture. And the bears are crawling up slowly. This looks like a monkey. All right, excuse my cynicism here. So let's see. Some analysts are right, some others are not. Here's the support today thing. Gold prices are so high, even central banks are feeling FOMO, right? For those that don't know what FOMO is, fearing of missing out, or fear of missing out. And it says right here, central banks view gold as key liquid component to their reserves. Germany's central bank, Deutsche Bank, Bundesbank, holds the world's second largest gold reserves behind the US. Gold prices at record highs sounds like a broken record, but central banks have continued to buy more than they're selling, even with prices for the precious metals at the highest levels ever. So I guess this is a real picture right here. It says right here, Deutsche Bank spent, yeah, the image. All right, the Feds. Fed likely to cut rates by a safe quarter point. We'll take a look at the Fed CME tools in a moment. But according to this article here, Federal Reserve is preparing for its next policy meeting with less clarity than usual. The government shutdown has paused the release of key data, leaving officials to decide whether to cut interest rate again with only partial view of the US economy. Most expect the central bank to take the cautious route. A quarter percentage point rate cut meant to preserve flexibility until the numbers return. All right, so that's the Feds. Here's Joe Diamond's what I just said a few minutes ago. When you see one cockroach, there are probably more. What to watch signs for broader credit market. We're going to be watching banks for sure. Here's the CME tool. As of now, a 99% probability for the next announcement of 29th of October. That's 10 days from today. And it's a quarter point cut. Okay, economic calendar. We do have some data here. I just want to explain to new people what this means. Economic calendar. It's public information. You can access it on our web trader or the app. It's available to everyone ahead of time. So traders that are serious about the trading try to know these things ahead of time, and it's important, I think. You can just Google it if you like and see. Now, what I take here, I take the high impact events only, as you could see everything in red, and the times here I choose GMT, kind of universal time. You can browse through it. You can choose whatever's relevant to your trading and choose, pick and choose whatever it's important to you. So these are the high impact events for the week. I'll just go through them. CPI numbers later on tonight from New Zealand, China, important. GDP numbers, industrial production, retail sales. As you could see, the expectations are much lower than the previous. Let's see if they at least match expectation. That we'll be watching Chinese market on Monday for sure. Tuesday, President Lagarde, as I said last week, she speaks a lot. So she speaks again here on Tuesday. Consumer Price Index from Canada, that's Tuesday. Wednesday, CPI numbers from UK, and again, another speech by President of ECB Lagarde. And Friday, we have a lot of numbers here. It looks like we're getting that CPI numbers. Governor of Bank of Australia speaks, retail sales from UK, PMI numbers from Germany, PMI numbers from European Union, PMI numbers from UK. And conclusion here, that's CPI numbers from US, core CPIs and PMI numbers from US as well. And that's Friday. Friday, big day for data, right? So moving on. Now, winners and losers, we're going to take a look at them one by one when we get to the charts. Just run the numbers really quick. Silver was the biggest winner, up 7.15%. Gold, 6.69. Coffee was up 6.39. Nikkei had a nice run after initially selling. I mean, Friday sold, but it came right back. So for the week, up 5%. Palladium up 3%, 309. Corn up 242. Copper up 211. On the negative side, the biggest loser was now, remember, these are all futures, right? Futures for commodities and indices, and you have futures for Bitcoin. So Bitcoin futures were down 8.35%. Sugar down 3.5, 354 to be precise. Natural gas down 341, and crude oil 202. So these are the winners and the losers. Okay, let's move to the charts, and we'll go by the group of assets. Also important to mention, we are in the earnings season, so we have. Sorry, I jumped. We have this week about 80 of S&P 500 companies reporting, so it's going to be a lot. Some famous names, that we'll go through them. A few of them, we can't really go through the whole list, but a few of them I'm gonna go through on the charts. Okay, so let's move to the charts, and we'll start with indices as a tradition. We start with China. Here's China. We had a sell-off on that Trump's decision on tariffs, right? Which is not solved. We're still waiting for that meeting at the end of the month, and the tariffs that they announced, 100% tariffs, should kick in on November 1st. So it was a strong reaction, and we pretty much recovered it. Here's Japanese index Nikkei. There was also reaction and recovery. So Nikkei is remaining strong. Now coming to US indices, here we go. This is a big sell-off. If you remember, we set up the Fibonacci retracement, and I think we saw it last time at 50%, and then we set the next market 61.8. So we had a nice recovery here, and we're trading around 61.8 mark. Now, on Friday, it was a sell-off that went below that spike, right? I just want to show you really quick dynamics of the market. It was a sell-off from the 16th going to the morning of the 17th, and then it was a reversal, and then we had a nice recovery on S&Ps, and across the board US indices, similar story, and we came back to that 61.8 mark on Fibonacci. Let's see how this week will play. Of course, Nasdaq, similar story, a little bit high here, and Dow Jones as well. So US indices are holding that strength. Again, reminds me of that picture that we just mentioned. Let me bring it up. The picture with the bears climbing. This could be the truth, or maybe not. So everybody's partying. We continue to the skies, but those bears are slowly crawling. All right. Just wanted to remind us of that. That's an US indices. The German index, it's not so lucky. Actually continued lower, almost doubled that move. Probably not almost, but did double that move. we are holding that trend line though, right? But it doesn't look so strong here. UK as well. We continue lower, but we are holding this 93.82 level and holding the 50-day moving average on the UK FTSE. All right, so that's as far as indices. That's as far as indices. Let's move to the individual stocks, right? And then commodities, and then we'll go through Forex. So individual stocks, of course, we want to see what's happening with the banks. And here's Goldman Sachs stepping down slowly. We just broke on Thursday below 50-day moving average. Friday, continuation. JP Morgan, DC of which I was talking about the cockroaches. Here we go. Thursday, sell-off. Friday, continuation below 50-day moving average. Bank of America, Thursday, sell-off. Friday, actually in green. And Citicorp, Thursday, sell-off. Friday, a little bit of recovery. So we definitely will continue watching the banks. Some of them are trading below 50-day moving average, holding that level. It looks like Goldman looks weaker than others in a way. And JP Morgan as well. So JP Morgan and Goldman don't look so happy here. JP Morgan is right in the middle between that 50 and 100-day moving average here, right? Let's take a look what big boys are doing, right? Apple didn't really sell off on Thursday. Friday went up. That's a good sign. Amazon, not such a good sign. We are playing with 200-day moving average here. Microsoft is trading in the tight channel here between 505 and 516, 517 after rejecting the 528 area here. Google looks super healthy here. Thursday didn't do any damage to it. It was a little bit in red, but nothing much after we actually touched the all-time high. And Friday we closed higher. So Google looks probably the strongest out of the whole Magnificent Seven stocks. You can say the same about Meta. We actually went lower than the others. We are below the 100-day moving average here. And Tesla looks strong. Tesla, by the way, it's one of the stocks reporting this week. I'm going to show you. I'm going to share with you a few that I prepared that are reporting in a moment. Let me just finish with these guys here. So oil stocks, right? Oil has been selling. Exxon is sitting nicely here on the 50-day moving average. Chevron sits right above 100 and 200 and 200-day moving average here. Now, pharmaceuticals, the Pfizer didn't do that great. There was a nice recovery here after slowly pushing lower. 2 days we had a huge move to the upside percentage-wise, and then slowly we came pretty much back to that beginning of that move almost and holding the trend line. So we'll continue watching. Pfizer, Johnson & Johnson though, it looks super strong here. We had the all-time high and continuing, as we said a few weeks back, that because of tariffs on foreign pharmaceuticals and so on, it looks like Johnson & Johnson's benefiting on that as a local US company. So that's important to watch there. All right. Now, two other guys that I mentioned sometimes, SQQQs and UVXY, right? Those are ultra short. This is the ultra short for NASDAQ. Take a look. This, let me just make it bigger here. This was the move with Trump announcement. This week we come down a little bit, but just shows you when NASDAQ is selling. Just to give an example, NASDAQ fell 3.3%, and this ETF moved 10%. Just something to pay attention to. So some traders like these instruments for volatile moves, and of course that comes with higher risks as well. SQQQs, and the other one is ETF for the VIX. Take a look. This was Trump's new tariffs announcement, big move percentage-wise, and this was Thursday bank's issue when volatility increased. Take a look at these moves. Also big moves. Then Friday we reversed here, almost erased the whole gain. But these two instruments, SQQQs and UVXY, are worth watching when the market has these huge significant moves. They move a lot on those days. All right, so let's take a quick look at the ones that are, like I said, 80 out of 500 S&P stocks are reporting. So a few of them will take a look really at this moment. So GM, General Motors, is reporting on Tuesday. There we go. There's GM. It's been sliding since around $62 to 100-day moving average here, closing at 58.36 on Friday. Tuesday, they're reporting the earnings. Next one is a big name, Netflix. Everybody knows that. Netflix has been zigzagging here, right? We're at the peak here in June. Since then, we had a straight sell-off almost to 100-day moving average here, recovery, high, followed by lower low. So it's a lot of indecision here. Another lower low, and it looks like if you were to draw the channel here, so this is kind of our new territory, new channel here for Netflix. 1246 on the upside on the resistance, and around 1133 on the downside. We're trading somewhere in between. The earnings are coming on Tuesday, so we'll be definitely watching Netflix. Now on Wednesday we'll have AT&T, IBM, and Tesla. If you remember, AT&T has been doing great until it stopped back in mid-September. Since then, it's been selling pretty heavily here, right? So let's see the weekly chart. So this 2530s area looks like support, which is, this is the level that we made started this move to the upside back in the week of April 20th, making a high, and then 1, 2, 3, 4 straight weeks to the downside. We rejected that level, so it looks like the support is around here, around $25, $25.30. And this last week was a positive week for AT&T. Let's see if earnings will help the stock making some recovery here, or we might be testing and breaking the support, also possible. So that's AT&T. Now, next one is IBM, also reporting on Wednesday. If you remember, we mentioned it, HSBC has been using the quantum computing of IBM for some tests and trading bonds. This caused, I'm not saying that caused, but it probably added to some value of the stock. Stock went up. We had a high here on October 7th with the spike, and then we had the reversal coming to around 270s right here. Friday was an upside after a sell-off on Thursday with the market on the banks. So let's see how the report will affect the price of IBM shares. And of course, Tesla also on Wednesday, as we said. Everybody knows Tesla. Everybody knows the controversial CEO and things that we've been seen in the history of the stock. So here we go. We had a nice recovery here after the sell-off. Then the week, 2 weeks of sell-off. This past week was in green, coming into earnings on Wednesday. This was the recent test around 400 psychological level, and the high here was 478.63. All right, so we're right in the middle of this spike up and down. Right, earnings on Wednesday, definitely we'll be watching Tesla. And on Thursday, we have Ford Motors and T-Mobile. So let's see it, Ford. We got Ford Motors. But it moved up, then we came back almost to 100-day moving average, and the last week every day was green pretty much. No reaction to this sell-off on Thursday, and the earnings are coming on Thursday. So we can try to draw this level. This was the initial high here before the sell-off. It matches this level here. So we're retesting kind of a quadruple retest of that level here. 1, 2, then we broke, came right back, and retesting that almost $12 level here. So Thursday earnings, and the last one, T-Mobile, also reporting on Thursday as well. Looks like the telecommunications stocks sold. AT&T sold, T-Mobile as well. It's been doing great, making highs here in March. Since then, been sliding lower, bounce here, came back. So let's see how earnings will play. You can see a lot of congestion here, consolidation. The question is which way we're moving up or continue lower. So that's, again, GM, Netflix reporting Tuesday, Wednesday, AT&T, IBM, and Tesla, and Thursday, Ford Motors and T-Mobile are reporting. And again, 80 stocks of S&P 500 will be reporting this week. All right, moving to commodities. And we'll go through the list of those winners and losers one by one. So silver was the winner for the week, and the price goes to silver. Friday, of course, both silver and gold lost ground a little bit as investors took profit for the weekend, obviously. But the big move in silver continues higher Friday with sell-off that erased the previous two candles in a way. So silver up 7.15% for the week. We're far away from moving average, so we could try to pull back, but as we saw in the slide, gold is being piled up by central banks. Silver has been in a high demand, physical and electronic. So let's see if that move up continues. Here comes gold. On gold, you have similar story. Friday, we had a sell-off here, profit taking into the weekend. Next one is coffee. Coffee had a positive week, up 6.39% for the week. Also, a few weeks back, we had this cross, they call golden cross, when 50-day moving average crosses about 200. So we might see the continuation to the upside here on coffee. And if that's the case, we might be coming and retesting the highs here. We almost touched the high around 418.90, and we have a 50-day moving average moving, covering higher nicely here. Nikkei, as we said, the Japanese index had a nice week. We already looked at it. Let's see if we manage to move higher here. This week was up 5%. Palladium, a nice move. Would be even nice if we didn't follow by Friday sell-off. Even with the Friday sell-off, wow, this is huge. Important to notice. Take a look on the weekly chart. We did break to this level dating back to week of April 16, 2023. That's 2.5 years, right? We did break, maybe took up some stops and turned around. Big sell-off. Pretty much erased almost the whole week of moves and still up 3%. Wow. Big question, is this a buying opportunity or is this a reversal? And we'll find out in the upcoming days, right? So this is a big price action move here. Again, just want to digest it a little bit. We moved above that level of April 2023, we said. This was the level around 1643. then we broke on a high volume lower, and then we continued. This is 1 hour chart. All right, nothing to guess about. We'll just follow and see what happens. Next winner is corn. This was the change of contracts. Looks like we're establishing new support here after a long sell-off here. So it could be that the weekly chart will see it much better. Double bottom here, change of contract, and possible continuation to the upside. So corn up 2.42%. Let's see if we manage to have a continuation of this move, or might try to close the gap between the contracts. Next one is copper. Copper had a positive week, 2.11%. Very choppy here. This was tariffs, sell-off. Recovery, and we're trading right in the middle of this candle here. So let's see what's next there. Now to the downside, of course, I'm gonna jump a little bit. Bitcoin, so serve dessert first. Like I said, dessert will keep for the end, but if we're already here. So Bitcoin futures were down 8.35%. It's a big move. And if you remember, we spoke about last week, will we retest this initial panic sell-off that happened the week before? And we did. We're actually currently trading below that low of that thing. So Bitcoin, it looks very bearish here in a way. We are trading below 200-day moving average, and we are trading below that low of that spike to the downside. XRP or Ripple looks much better. We're trading right in the middle of that spike. The spike was huge here, right? Made a lot of crypto traders and investors suffer a lot. Then we had a nice recovery here, and now we are holding still below the 200 moving average here, but kind of, we're not gonna guess. Let's just draw a quick Fibonacci for that range here, approximately here. So we're trading right at 50%, as I said, in the middle of that a huge range candle on that sell-off on Friday on tariffs, I believe it was. All right, so that's on cryptos. Now continuing with commodities, we have sugar. Not such a happy week. Sugar went down 3.5%, 354 to be precise. And again, we're coming to this level around 1540s for possible support. Next one is natural gas. Also had a selling week. Friday, a little bit of recovery here. Natural gas was down 3.41% for the week. Friday was a profit taking after a pretty long sell-off here from 350s all the way to below 3. And we still close below 3, 2999, 2999. Interesting. So we'll be watching natural gas, of course. And crude oil closing that list of losers, continues lower. See, the moment we broke 660 psychological level, or even before, the moment we got out of this channel, was a huge spike to the downside, and we have continuation. Now, the question is what's next? We have a lot of geopolitical things. Of course, the agreement in Gaza helped to calm down worries in the Middle East. It looks like it. So that's kind of removed the worries of supply in a way. So that's added to also to sell-off of oil. Also on the demand side, worries about tariffs and China and other things probably did it made an effect on probably slower demand. Also, the output of oil by OPEC Plus has been increasing lately, so that's logical that oil would be selling here. Now, question is, will we continue lower and reach this level, which dates back to May 4th of current year, or will we try to recover and kind of confirm this 61.40s level as a possible resistance and then continue, right? So that's on crude oil. All right, that wraps up the commodities, and we're moving to Forex. Again, the dollar has been weaker here. Before that Fed's decision, it comes in 29. Makes sense. Another cut, not so great for dollar. But we are holding nicely. You see the 50 and 100-day moving average, they're pretty much in one spot. Friday we bounce off it. So let's see if dollar manages to hold these levels, or we travel further south and retest the bottom of this channel around 97.40s. Of course, the majors is just the opposite, the mirror image. We had a nice recovery in euro, profit taking to the weekend. Pound, same story. We were sitting kind of hugging the 200-day moving average. Wednesday, Thursdays, we moved higher. Friday, we touched the 50-day moving average and reversed a little bit. Australian and New Zealand dollars, they remained weak because of concerns on China, of course. We have some news this week. Let's see what happens. Swiss franc, dollar's been stronger a little bit Friday, a little bit of reversal. It looks like dollar index exactly. USD CAD has been strong. I think a lot of it to do with weakness of crude oil. We had a strong move and continuation here. You see a lot of indecision here Wednesday and Thursday, open and close pretty much in one spot with tails both ways. And then Friday, we had a sell-off. So this level here, 140, 140.15, this is the level from May 12th, which marked the resistance and then the sell-off. If we try to close below that, we might actually see a little reversal here, or a big one, who knows. If we continue holding, we might see the continuation to the upside as well. Both scenarios are possible, of course. Yen, dollar's been strong against the yen. Friday, just this past week was a sell-off. So you could see here, we reached on the 9th of October, the level of 153.29. There's no level here, so if we try to continue higher, we might reach the further levels here. And as you could see here, we did close below the previous spike, followed by reversal here. So it could be that this level around 150.80s could be our new resistance as well. So let's see how it plays out. And in general, I just want to see what yen is doing against other currencies. It's been strong against Aussie. Friday, just a reversal here. Been strong against CAD. Neutral again with Swiss franc. It looks like they are trying to decide who's stronger, right? We have a very tight range here. Like both of them also play the role as a safe haven as well, so both of them are strong. Euro, JPY has been sliding lower slowly, and New Zealand was a sell-off, a strong sell-off recently. All right, so there's some strength in yen, even though it's been weak against the US dollar, right? And that partially one of the strong reasons why Nikkei is doing great, the Japanese index going high. All right, I think we're done. Let's just summarize things. And it's been a big week, right? The past, we had this concern about banks, which might continue if we listen to Joe Diamond about those cockroaches, that basically if one issue came up, could be more issues. And I'm sure if we dig deeper, we'll probably find them. So we have earnings, 80 out of 500 S&P 500 stocks are reporting this week. We have a lot of data here, including the CPI data, right? We're getting closer to Fed's decision. We have Chinese data. We have winners and losers to watch that we mentioned. And in general, it's going to be a busy week. So enjoy the weekend. Get some energy, spend some quality time with your loved ones. Don't forget about the social media channels. Subscribe, click the bell, be notified. And of course, I want to wish everyone a great and successful and profitable week ahead of us. And take care. All the best. See you next week.